Australia's housing market is at risk of a major crash, according to a global analysis report. The International Monetary Fund report says the nation's market is one of the most misaligned in the developed world as interest rates rise quickly. Average Australian households currently need to spend more than 40% of disposable income to afford a median-priced house. Rent prices across the country are also climbing at its fastest rate, and in a decade they're predicted to accelerate further. The IMF report states price misalignment combined with the impact of rate rises is comparable with previous housing market busts. And for more on this, I'm joined now by senior economist at REA, Paul Ryan. Well, Paul, thank you very much for your time here on Afternoon Agenda. What do you make of this report and the observations from the IMF at the moment showing that the Australian housing market's looking misaligned?
Yeah, no, thank you very much for having me this afternoon. The IMF report kind of is telling us what I think everyone knows is that we saw housing prices increase significantly over the past 2 years. The IMF report reports up 25% in real terms since the start of the pandemic. And now with interest rates rising by 300 basis points over 2022, we've got a situation where current price levels essentially are really unaffordable for people to buy. And on the other side of the coin, you've got really strong rent price growth. So it's not like renting is a much cheaper option for a lot of prospective home searchers.
So there must be a lot, hundreds, thousands maybe, prospective home searchers right across the country out there. What's the advice for them at the moment? Really, is the market starting to cool? And do you think that cool off is going to continue into the first few months of next year?
Yeah, that's our expectation. And if you look at the IMF report, while I'd quibble with their measures, so their measure of misvaluation or misalignment, I don't think what they're suggesting prices will fall by, so somewhere between 30 or 40 or 50%. But what it does show is that these measures of misalignment are higher than they've been in the past. And that's the fundamental thing that is why analysts, ourselves included, are expecting prices to fall throughout 2023. Now, on the other side of the coin, you've got really strong housing demand, and you can see that in rental markets. And that's kind of the backstop that we're expecting to bring balance back to the market. Now, unfortunately, that balance is going to lead to higher housing costs, both for mortgage holders as well as renters into 2023.
So if there's a misalignment across the board in the housing market, is that coming through in a misalignment in sort of prices, quoting? Are we seeing a lot of underquoting or issues with quoting across the board, not just here in Melbourne, but in other capital cities too?
I think the misalignment is, we've seen this process throughout 2022, where when interest rates started to rise in May this year, sellers were expecting prices that borrowers increasingly couldn't afford. And so we saw auction clearance rates quickly drop. And that was partly because sellers were expecting prices that they could achieve earlier in the year. And borrowers, with borrowing capacity down now 25% over the year, they just couldn't afford those prices that sellers were expecting. And more we've seen over the past couple of months, auction clearance rates stabilise. And part of that is that sellers have become more realistic as prices have fallen. So that process will continue. We've seen those interest rate increases from the Reserve Bank over the past few months will continue to flow through into borrowing capacity and purchasing power for borrowers into 2023. So prices will slide lower, and that's what we're expecting. We're expecting to take several months or most of kind of 2023 for that new balance to be established, where sellers' expectations are kind of aligned with where borrowers can afford.
So the IMF report puts Australia on par with nations such as New Zealand, Canada, Hong Kong as well in terms of this misalignment. Have we been seeing things happening in the housing market in those nations that haven't quite occurred here yet? Maybe just a bit of an outlook for investors?
Yes and no. I mean, the consistent thing across housing markets across the world was, we saw interest rates fall, and that drove prices to increase pretty much all across the world. And now with interest rates rising, we've seen prices start to fall. And if you look at across the sea, across the Tasman in New Zealand, we've seen interest rates increase further there and prices fall further there as well. So, I mean, that gives you a clear indication that one of the big risks to housing prices throughout 2023 is the extent of interest rate increases. So markets are expecting another kind of 50 basis point increase from the Reserve Bank. Any adjustment higher of that will have more negative effects on prices in the new year.
Well, so as for someone who's in the housing market myself, this is very interesting observations that you've given us. I really appreciate your time. Thank you so much.